Is that what they said? Instagram? Yeah, that's not bullish.
I'm watching here. No trade yet.
Scaled a little bit more. Meta out $70 per contract. Quarter position left.
Yeah, that was a good overextension short there for sure. Nice catch. Maple's always on point, man. I'm still trying to get mentally prepared to deal with a Monday, and Maple's already all over it. It's great.
You gotta vibe out, bro. Gotta vibe out.
Hey, listen, if they can monetize WhatsApp correctly, that's a pretty big growth engine.
Oh, no, I think so. I think it's just a low volume news pump, pre-market. I think buyers have their bids set a little bit lower, 690s area.
Come on, push it up to 900. I don't think it is.
I'm watching AMD here if it rejects around 120.80 to 121. Meta rejected the 705 pre-market right before open. Just waiting and seeing for a few minutes.
Really just consolidating sideways here. I'm waiting for that outsized move to the upside to set up for the short side. But we'll see if we get it. Kind of just a slow open after that big move up.
No real data today.
Nope, we just had the 20-year bond auction at 1.
I mean, there's two things, right? It's a shorter week. I think Juneteenth is on Thursday now. Right? So that's, I think market's closed then.
Yeah.
Yeah. And then FOMC, I believe, is on Wednesday.
Yep, and then OPEC's Friday.
Yeah, exactly. So I feel like, and then you have the new conflict in Iran, and Israel. So there's a lot going on. So I would assume that today in particular, since it's the one day that doesn't seem to have, there's a ton of news, right? But as much like solidified news or a solidified market event, it would make sense for the open to be a little bit slower.
Yep, gotta stay frosty.
Yeah, exactly.
IWM selling off, new low day.
There goes AMD.
Gap fill.
Ripping. Look at AMD on the daily. Beautiful setup.
Yep.
I do want to try to short AMD very soon. So it got over my 120.80 to 121. But usually you see some rejection on these setups right around the previous candle high, which is the 122.21 prior on this what's it called? Bullshit man bandit baby.
I think pounds here are just going to go hit 150 today.
Maple likes that.
Let's go.
Looking good. I'm short yes.
Gold is pulling back. Okay, are we gonna reject that 800?
Yeah, that's what I'm watching right here on ESNNQ for a rejection spot up here.
Yeah, I'm gonna see if we can go retest it again to take a short on NQ for a scalp.
Yeah.
Something with a
There's
nice
a lot of
little-
volume on that candle on NQ.
Is that an NVIDIA? No.
I don't think NVIDIA's really moving too much. Kind of open top, just consolidating.
Yeah, it's just compressing.
All right, over $200 per contract gain on the Meta 695 puts. I've slowed
Nice.
down to the runners now. Trailing stop loss set.
Well done.
I did a starter short on AMD for Friday, 121 puts.
$30 orb set, 13 minutes.
Are you going long Meta at 690?
I'm a if this then that trader, so I gotta see some
I'm starting a
confirmation.
short on NQ.
I gotta see like a CBC flip, respect of the 20 EMA, maintaining higher lows. But I like this previous day high retest. I wonder if sellers cover here for an imbalance. Oh, dude, I should have waited. There's 300 a con. Damn.
Here we go. AMD dropping. Come on, baby.
Smack it down, Q's. Come on.
I know, right?
Big fat red candle. Bring it in.
Did any of you trade last night?
I actually didn't. I know I definitely did.
I did too.
Nice long.
Here we go. Here we go.
Yeah, nice long upper wick there.
There we go.
Look at that.
Minxie.
I am done for the day.
Nice.
I love it.
Nice.
I'm covering some NQ right here. I haven't covered ES. So looking for a little bit more. NQ definitely got the better rejection right there. What's our CY doing? Actually bouncing.
Some people are just waking up.
Some people are waking up and some people are finishing their day.
Yeah, but I traded last night and made money last night. So this is just a little bit of like a icing on the cake, and I'm sure I'm still gonna trade. It's so funny how for traders, 20 points on NQ is different, compared to somebody that like tries to get 100 or 200 or 300 points.
By the way, I just trimmed AMD up $25 a contract on the short
like-
there.
Well, like 20 points is like more than enough for us, right, Minx? You know what I mean? Like, I
To
feel like
me,
novice traders coming into the market wanting 50, 100, 200 point moves, like, those are home runs, right? And like a well-tuned, profitable strategy is built upon base hits, and 20
Yeah.
points is
I'm gonna stop on ES.
amazing.
Yeah, I saw the volume come in on
Yeah.
ES.
Same for Qs or MNQ.
I think people just need to understand if you're a scalper trader, like what type of trader you are. I mean, if you're somebody like Rizzo who's more positional trader, then obviously you're looking for a bigger time frame.
Yeah, but it also depends, you got to have your risk to reward as well. So if my stop loss is 50 ticks. You know, it's a pretty tight stop loss. So if I had a 50 point, what did you call him? Stepchovich?
Mace, who are you talking to?
Amp.
Oh, I can't hear Amp.
Yeah, it must be unmuted on your Discord.
Oh,
I
he
understand
just,
the headline is U.S. Trades Chief is going to meet the U.S. Trade Representative Greer.
Mace was talking to Amp in Discord.
yeah, I thought he was on here.
Oh, Jesus, Mace. What we gonna do with you?
Booter.
Send some cooking courses.
Oh my god.
Damn.
Bird. Just like my food.
Oh my god.
I took MNQ long, 2-minute CBC risk. Tight risk up here.
Watching Pepsi again, if it can get a break in base over 132, be the fourth time I've traded this thing.
Yeah, I'm grabbing a starter on shorts here.
What ticker are you looking at for your shorts?
Spy.
Spy, okay.
Yeah, I'm just waiting right now.
Yeah, if it keeps getting closed as above Friday's highs, then I'll jump out.
I was gonna say I wanted to ask why, just out of curiosity. I don't know if I'd short here. It's just too bullish, to be honest.
Go Boeing. Casey, did you ever get Boeing?
Fuck no.
Fuck you.
Boeing what? Call them puts?
Yeah, calls. It's starting to heat up now.
Cooking up dope in the crock pot.
Never play Boeing just because it's a hunk of dog shit, but
Dude, it really is.
I've gotten burnt on Boeing so many times.
yeah, it's so bad.
I get paid for shit on Boeing just because I suck at trading it. That's really it. Like, the chances of me getting a winning trade on Boeing, I think, are probably like maybe 2 out of 10 times.
It is a very hard ticker to trade.
It really is.
And then it just comes out with just shitty ass news almost every day.
They're up like 40-50% and all of a sudden reverse candle. You're just like, okay, there's a headline somewhere. Oh, another door flew off. Damn it.
Oh, TTD, big bullish engulfing on the daily.
Holy volume.
Yep.
Bingo. Bye, baby. 30-point gain. MNQ. I'm going to sell 3/4 right here.
Internals are still very positive on Baldy and Baldy Q.
Oh, yeah.
Let's go. Trail that stop.
Get that reverse on IWM and RQR. Watch your airlines right here. Watch UAL and DAL.
Jeez, gold is freaking pulling back. Like it is. What is that?
Risk rate, baby.
Went from 44 to
Iran signaled it wants to de-escalate hostilities with Israel.
oil is falling too. Well, this is definitely bullish.
Trailing stop loss hitting profit there on Meta. Great green trade.
Oil, big drop there, yep.
I feel like I told everyone it's been bullish, no?
Haha. Minksy's been trying to tell us otherwise.
No, I just get in, get out.
Iran stated privately it will resume nuclear talks if the U.S. stays out of the fight.
Oh, God.
Yeah, that doesn't surprise me. They don't want to fight the U.S. on top of Israel.
Holy oil drop.
Yeah, gold too.
And gold is like a hedge, right? So, huge market push up would probably cause it to push down like what we saw in April. So that makes sense.
Yep.
All right, that's 60 points on MNQ, guys. Make sure you manage your trade, please. I'm just bumping my trailing stop loss up, but typically we see 70s to 80s right here. This is not an entry candle. This is not confirmation for longs. This is a scaling trigger, okay? We're about to have 30 orbs set in 2.5 minutes. Typically, we see a little bit of profit taking going into 10 a.m.
Q's up 1.3%.
All right, 60-point gain MNQ. I'm going to sell down to the runners now.
Damn, oil is. I'm trying to get into like an oil short, but
Okay, 2 minutes till 10.
I'm so glad I got done earlier.
What a ripper.
Yeah.
Maybe it's previous week highs. Let her rip to it if she wants to.
Gold got beat up on that news, too.
Mm-hmm. I think in an environment like this, you kind of got to take your profits faster because any headline can come out and just wipe out your position.
This is where Minx thrives.
Yeah. I'm up nicely. I'm just hanging around.
Guys, there's just one button that we need. The green buy button.
AM Dizzle is booking.
Yes, it is.
my honest thoughts. I think the long still might be Long Island for a little.
Long oil. Yeah, I think so. Well, that was long. I started longs in energy about a month before, and I scaled out of some. I didn't expect the war to really spike this thing. Yeah, I mean, like Target hit a little faster than I had expected on energy.
There goes Hims over 60.
Yep.
Oof.
Let's go, baby.
Let's go. How much am I up on my shares here? The ones I have left. I am up 137%.
Let's go.
Very nice.
Now it just needs to go to 100. Dude, if Hims goes to 100, that would be insane. You have a big resistance zone as it gets into 60 up to 62 on Hims. If anybody is long.
I don't know. Yeah, go for it.
Sorry, no, I was just trimming some longs from Friday.
I don't know if you guys were looking last night. Like, I've been following the war kind of on the back end. The U.S. was repositioning a lot of tanker ships last night towards the Europe and Middle East.
Ooh. Oh, actually, you know what? I might have seen that post. Did you post it, or did I just see it
I
elsewhere?
was looking around. There was a bunch of people talking about it. It was like 26, 28, like different tanker ships kind of just moving along the chain. Someone from like West Coast, someone from like Honolulu to East Coast, someone East Coast to Europe. But there was definitely ones that like went from like their base to where a missile facility is, and then to Europe. So yeah, I don't think this headline today is. I don't think there's a coincidence it came out today after that, but maybe I'm wrong. A notification VF Corp moving.
It would be nice if we can go up to 22,000 on the June contract and then short from there.
Spot's definitely starting to look a little toppy right here. Might get a pullback down to the 602s.
Come on, baby. Bohang, new high day.
Damn. Looking strong. I mean, you're saying topic, but trying to get back over that 700.
I can't do anything with this right now. I don't really have a whole lot to go off of up here. It's overextended, but that's about it.
Costco at 1,000. I got some notification about Celsius. It was hanging out in like the 30s. Now it's hanging out in the 40s. Good for that.
Concerned of a 30-minute orb high sweep here. We pushed outside of the orb high, but price is accepting back into the range for now.
I kind of see OPEX. Like some options that I've held for a while are expiring this week versus like the weeklies and stuff. Interesting. I gotta get out of some of this.
I gotta get out of some of these. Look at Evan.
It's gonna end up having me that
What do you think? I got Uber. No, I'm not gonna get a sign series.
Uber?
Uber, I got up a little bit right now. I sold most of them, but I could. I think it. What do you guys think of Uber right now? The setup like on the daily, weekly.
Let me check.
Uber.
The oobs.
Oh, it's a little rough, honestly.
Yeah.
I'm head and shoulder, but higher than this, so neutral.
Yeah, I have really no say on it, to be honest. We can go either way.
Either back over 87 or needs to go down to like the 81.
Super risky here, but I'm taking MES short, high of day risk.
I think that's super smart.
I mean, for me, like my rules, I know I'm trading against CBC and 2-minute EMAs, which are bullish, but I wonder if it's a orb liquidity sweep right over 603.43. If not, it's MES. It won't hurt too bad.
Yeah, I mean, I think we could get a little dip here. If they want to continue this run, this would be a perfect spot for a little dip. Push us down a little bit. NQ maybe get into like 125, 130. And then reset itself and go. And obviously, ES should follow down.
Microsoft above 480.
I'm gonna take all profit off on the MNQ longs here.
All-time high.
52 points.
Boang. You go,
Yeah,
girl.
UAL and DAL are freaking ripping.
Oh, all like aerospace names are going, or I should say flights, whatever.
Just airlines.
Yeah, there you go. Couldn't think of it.
Are moving up. Yeah, UAL's up like
oil's coming back in.
5%. Now
I've
it's
been looking
moving
at
at 5.
flights for a month. I was looking at flights for a month, and the price was shot up like crazy this past weekend.
Damn. Boang calls are up 15%.
Watch the cruise lines as well. They're at a big spot. If they can get over this area, they can continue to run as well. You got a gap on NCLH just above and CCL.
I will say, not all those tanker planes I was talking about, they are all Boeing planes.
Boang.
Maybe that's all it took to be the for Iran to be like, yeah. All right. There's a report out. Israel warplanes may strike at Iranian state TV and Tehran.
Hey, well, Q's just got a new high there.
I mean, I guess that's our other like potential reversal of this news is if Israel's like, let's go for the throat.
Let's go for it.
I think that's what's going to happen. They've already said that they're not ready to talk. They haven't met their goals yet.
Yeah, that's a risker. I mean, you get your opponent on the ropes, don't you keep swinging? Not cheering for that. They're just saying that's just.
Well, so they're, you know,
Side.
that is their goal. They've said that, I think that's their goal, is to try and have a regime change. But nuclear.
I am not in any trades.
take the final sell on Zoopers too. Damn. What a weird move. Nice. Let's see. I'm going down a little.
Rivian pushing higher here to $14, up 4.3%.
I'm going to cut MES for a little loss here. Too early on the liquidity sweep at the orb high.
Meta's trying back to where is this? Where's Hive Day? Hive Morning. It wants to get Hive pre-market again.
All right, IWM starting to play some catch up here. This move on SPY and Qs, it finally just hit its previous day high.
Mm.
I'm watching the banks. Watch Bank of America is pushing here. America's bank.
Yeah, SPY's plus one ATR 604.38, but I don't know.
You have a strong kind of daily setup here on BAC, and it is in a daily squeeze. It's been in one for a minute. It was moving downside. It never flipped bearish. It went flat, and now it's curling to the upside. 4 hour looks like an ascending triangle. It needs to get above 45.13. JPM. JPM is already breaking the ascending triangle breakout here. It's in a squeeze on the 1 hour, the 4 hour, and the daily. It is already going above it right now. This looks really good.
I'm just waiting still. Looking for a spread soon too.
Mag 7 looking pretty strong. I'm sure Microsoft new all-time highs. Let's see what else is in new all-time highs so far today. IBM again, Palantir, obviously, Raytheon. Seen a couple nuclear names, Cameco, or Cameco, whatever, CCJ, Oklo, Spotify also new all-time highs today. Spotify's at 720. Also ASTS for you guys. I'm seeing that one's up 10%. I know that gets talked about a little bit.
I took some Meta 715 calls, 10-minute CBC risk, smaller size, just protecting profit. Meta testing pre-market high here.
Had about a break. Pre-market high. I got a notification Chipotle at 5%. That's an interesting one. Still down 13% on the year at CMG.
I'm about to go short here. Looking to see how the channel closes. I got a buy right here.
I grabbed a starter short.
There's still 4 minutes left on this candle, but if it closes red on SPY back down to under 603.60, you're gonna have an evening star right up here, right with this next MM.
8-minute call sold half.
Nice. I'm watching here. I'm not doing much yet. I already had some trades.
MNQ long, Bill Breaker Scout.
That's what I like to hear.
That's what I like.
You might want to sell your bone calls, by the way. No,
Why? What happened?
I bought a little.
Oh, yeah, I'm out. Nah, I'm still in, baby. We're going to ride it together. I'm not leaving you, Evan. I am up, though, already. So I will be leaving you at some point, but just not yet. My mind is telling me no.
All right, guys, I am done. I will be back later.
Bye, Mixie.
Bye, guys.
Bye, Ming.
Was that a threat?
That just means a new high of day is coming.
But she said she's coming back later. So does that mean a new low day is also coming?
Yes, that is probably accurate. All right, this candle in SPY is about to close. It did not close underneath the level, and it did still close underneath the resistance. So it's actually going to close. Looks like a neutral candle here on the 5 minutes. So I still have nothing.
I'm going to put spread. I started it. I will add on dips. I don't want a full position right now.
Dude, I want to pull back so hard so I can get in on the long.
Yeah.
I mean, we haven't touched the 21 EMA since the opening candle.
Yeah.
On the 5 minute, we have not pulled back down to it since the first 5 minute opening candle. We've just been extended from it all morning, and I'm not chasing it.
Sometimes on days like today, it'll come up and it'll sweep that +1 ATR, and then it'll pull back a little bit from there. We've also been seeing some reversals right at 30 for whatever reason. But I don't know. I don't like longing up here, and I'm not ready to short yet. I'm just kind of watching. But yeah, I think it was Evan was asking me. So Evan, when SPY got up to Friday's highs right there, I thought I saw something on the candle. That's why I added that starter short. I thought it was going to poke its head above and then pull back down. And I was just going to scalp that. But obviously when I started pushing up higher, I got out.
Evanito.
Well, sometimes I'm wrong, bro.
Do better be.
I know. But yeah, I'm willing to lose a little bit on the starter, position when I think a setup's about to occur, and then sometimes it doesn't play out. You just scrap it, move on to the next.
Yep.
All right, 15-point gain. MNQ covered or sold half.
Nice. AMD is on a tear. HIMS is on a tear. New highs.
What do y'all think the market reaction will be if there's no rate cut at all?
Well, there's not going to be a rate cut. I think that's what the market is projecting.
They expect that in what, September?
Yeah, I don't. I'm not running my computer right now, so that won't move us. What's Powell's going to say?
The less rate cuts, the better.
The original expectation was for June to be the first rate cut, right? I mean,
Yeah, a long time ago.
I guess.
I think now we're pricing in what, 1 or 2 rest of the year.
And what, we were originally pricing in what, 3 to 4 or something?
Yeah. Let's see. Yeah, it's like less than 1/10% to cut this time around.
Huh.
The chance we raise rates next we want.
Meta pushing still here outside of pre-market high. I'm about to scale again.
Damn, that is a nice move for Meta.
Up and down. We got them both ways.
If only I took it with you on that way up. I clearly wanted it to go up.
Oh, you're good, bro.
But who knew? Probably wouldn't have if I took it with you. Just like these Boeings.
Yeah, what the hell, Evan?
I know. I told you so. It's going down.
You're screwing me.
All right, trailing stop loss hit break even on MNQ. Little scalp.
It coming into the 9 on the 5, as well as the orb 30 high.
Yeah, that's fine. Nothing crazy though. Ooh, ugly move. Yay.
What, it just dropped?
Yeah, well, just holding a nice area and drop below it.
Oh, brother, this guy stinks.
Well, I'm looking at de-escalation, at least see right now. So, two headlines: Iran's Revolutionary Guard called on Tel Aviv residents to evacuate as soon as possible. U.S. said that to Israel said that to theirs earlier, and then Israel Defense Minister said is Iran state TV radio about to disappear.
Yeah, I saw that.
That one was I saw it earlier, but it just got restated.
Okay, let's see what the market does here.
And I ran so far away.
And I ran. All right, we just hit the 9-minute. Wow, 5-minute 9 EMA.
You got a 9-minute chart over there, Knox?
Damn right, baby. Got that dog out here. Got that MF dog.
US UK trade deal. UK Prime Minister saying that it's final stages of implementing trade deal. Expected to be completed very soon.
Trailing stop loss hit break even. Meta.
I feel like we might see some analyst notes tomorrow on Meta.
Yo, while it's slow, I got a question for the speakers, right? What are some things that you guys do or maybe utilize to keep yourself grounded through the trading session?
What are things I do or utilize?
Yeah, like if you feel like, like right now, it's just hanging above the EMAs, analyzing it, what's keeping you from going long or short or vice versa?
So, me personally, I mean, over the past 20 minutes, we've kind of been chopping here at these highs. We did just obviously get a new high with an upper wick. I mean, this whole scenario right here, I had 2 trades already. Well, I guess I should say I had 1 trade already on AMD. That was very quick, worked out really nice. Boeing swing working out really nice, and then I had a little scalp on NQ that did not work. But me personally, I mean, in a move like this, I'm looking for a dip. I mean, we have been strong all morning. Individuals are also doing the same. So I'm waiting for a dip to buy. I'm just kind of sitting here and being patient for that more so. Now, kind of pivoting a little bit, I guess, I did a put spread. I started a put spread, I should say. And I'm also looking to add in on the dip as well. Because we're over the orb 30 high, again, trending, everything looking good. You have IWM going higher. You have Qs and SPYs near high. I mean, things like AMD still making new highs. Google's lifting up here, trying for highs pretty soon. I mean, there's a lot of confluence for me to say that I think we can go higher. I just think we need that dip. So more so just being patient.
Yo, I love that, because it shows like respect of your rules, right? A clear understanding of what you're looking for, I think a lot of the listeners or even just newer traders struggle with maintaining that discipline to wait for the proper setup, mainly because they don't know what is a proper setup or what makes sense to them. But thanks, I appreciate that.
Mm-hmm.
Yeah, I'm like going through emails and doing everything I can not to trade this.
I'm about to start playing video games to do it.
Like I'm in real estate, so I look at real estate. Like anything not to I know what the rules are, and the rules are do nothing right now. And you're a little disappointed because you're like ready to trade. It's Monday morning, market opens and rips, and you're like, there it goes. Oh, there it goes. Oh, should I get in here? Should I buy it here? Should I buy it here? And it just keeps going, and you're like, fuck it, let's do something else. And I did come in with some Valero calls, so I played with those and kind of worked my way out of those because the market was the market in Valero. I was actually bidding for calls in order to get sell calls. It's that thin. I didn't realize it when I bought them. But so I was playing that game this morning. So, you just have to find something to keep you busy and keep one eye on the price action and look for the setup. And
I love that too, because you said, you got to a point where you're like, fuck it, right? And for a lot of traders, that's where they just start executing blindly. You know what I mean? And you were like, fuck it. This isn't lining up with my technicals, my systematic edge. I'm going to look away, right? And that's huge because I rarely ever hear that answer, and coming from a profitable trader, right, like Frank himself, makes sense. You don't have to force yourself into an entry into a trade. Sometimes the best thing to do is sit on hands on a cash position and walk away.
Exactly. You keep your cash. And we traded last night a little bit, so I was up a little bit last night. I'm like, hey, this day's not too bad. Just wait. There'll be an opportunity. We haven't gotten a lower high yet. We haven't gotten any changes. It's just, and then when we do get the dip, it'll dip a little more than you think it will, and you can get stopped out on that dip. So you have to be careful on days like this.
Not holding like a sentimental bias, right?
Right.
Yeah, I mean, I think a lot of traders struggle with, that thought process of they will win every day. I mean, I don't log in thinking that. I mean, I hope that, of course, but it goes with anything through trading, through life. You can't win every single time. I don't expect that. This is what keeps my mental state somewhat balanced, right? I'm not being overly disappointed if I lose a trade because I know that I've sized appropriately to lose that trade. So, for the listeners out there, if you're stuck in a stalemate like most of us are right now, none of us said that we're confidently thinking long or confidently thinking bearish. We're just waiting for the market to give us a key signal to then react to that said key signal.
And the answer is pretty simple. If it's it's not your trading setup, just don't touch it.
Yeah, I know, right?
and then that then brings you another question, okay, what is your trading setup? We all have different trading setups here.
Yeah, 100%. And a lot of traders, they just don't know. They trade based off of urgency or feeling or which is gambling, right?
I am short up here on SPY.
Oh.
Giving it a shot. I would love to buy the dip. So I'm just looking to go short here. I'm looking for a little bit of a pullback. I'm going to exit the short, and then I will try to flip long. I will not enter into a long position up here. I do have a big zone up here on spot for the short, so I like the risk reward for it, but it's been very, very slow morning for me. I've just been sitting back and watching. Answer Maple's question, what I do whenever like the main names that I trade, like SPY and Qs, are just not giving me the setups that I'm looking for, what I start doing is I have a watch list of 235 names. Now I don't look at all of them, but what I do when I don't see the setups that I like on these, the main names that I trade, like SPY and Qs, I will just scroll down the watch list and see what other individual names are doing to see if there is other higher quality setups over there. So, for example, like CVNA, I have a put set up right now on CVNA when it broke 292. And it has relative weakness. It's making lower lows, lower highs, getting a nice move to the downside. So just scrolling through the watch list, don't limit yourself to just like two tickers. Like get comfortable with a handful of the same tickers that you like to trade. But what I do is when they're not setting up and I have the itch that I want to trade, I just look at some of the individual names that are maybe just given the higher quality setups intraday. Like the HIMS this morning for the upside. AMD is absolutely ripping here. It's just relative strength all morning, just right in the 9 EMA. So I just scroll through the watch list and just go find these individual names that have higher quality setups. And if I see something I like, I execute on those. So that's kind of what I do whenever, I get the itch for wanting to trade, but I don't want to break my rules with SPY and Qs.
I like it.
Jesus, AMD.
Yeah, AMD is going.
Yeah, it's not stopping.
10%. Oh my god.
Evan,
Going?
Boeing is almost at highs.
Large flaccid Western to run.
U.S. advises do not travel to Israel. Let's see what they do. Let's see what they do. Ooh, AMD. Big dollar.
Get up to 10% or did it pull back?
It dropped a full dollar there really quickly.
So I was looking at the 2x Robinhood ETF, and it was flying, so which told me Robinhood moving higher too.
Ooh.
All right, 15-minute candle is about to close on SPY and QQQ. It is confirming the bearish setup that I was looking for. So I like the 10-minute rejections as well on SPY. So would like to see the next 5 to 15 minutes hold underneath that level and then pull back a little bit more so I can start trimming.
Something's going on with healthcare stocks.
Ooh, they're holding up there.
Damn, look at UHS, Universal Health Services. Big old damn kids. NVIDIA new high.
I added more put spreads as we are bouncing here.
VIX back under 19. Bye-bye, Vol. Vol, go away.
VIX is back under
Rain, go
16.
away.
Oh, 19. They said 16. I was like, holy shit.
Oh, no. That would have been gnarly. But it can go there, for sure.
True.
choppy up here. Nvidia's up 2%, ripping. Very nice. Finally getting out of that morning consolidation here. Let's see if it can keep it going. Looking pretty good. Morning, Rizzo. How you doing, brother?
Morning, Jordy.
I love seeing your dinner posts. You'll have the plate of spaghetti, your drink on the side. You're like, Bears fucking suck. I love it.
Could be a orb high liquidity sweep if price accepts back into the range. I think it's a decent risk reward short. VWAP, mid orb, potentially orb low spot. No bias, no position maker.
Yeah, short. I did not trim the SPY puts yet. There's not enough on the option side for me, but I did trim ES right there. I got short at 105. I just covered at 100 for 5 points on ES.
Solid.
I'm trading the Septembers and not the Junes.
Yeah, I'm on the new ones. That's a top step. Didn't take anything though yet.
Nvidia, big stick. Over 145 now.
Oh, buddy.
Nothing like AMD today, though, but big stick.
Literally. AMD is on a fucking mission.
Dude, I know. Insane. It's going to catch up. But it does have a lot of problems. I was looking at the yearly chart, 145, 150 area. So we'll see how it interacts with that level.
All right, come on. Bring it down a little bit more.
Chicken trying.
Come on, SPY. Right here. This is a level. Just break it. And solid red candle. Come on. A little bit more so I can track it. A little bit more. You can do it. Let's go back and do it.
I'm gonna tear it down a bit. There's some gaps we could definitely rebalance too. 143.50. I feel like I have short. That might still be up straight now. I don't know if he's here. Evan, are you in any options plays still? I know you've been playing a little bit.
I am. We'll talk about it a little later. We'll see how they end up playing out.
Heard that.
Not well.
No, well, no. Uh-oh. Dex back over 19.
I'm about to trim another ES right here. Still have not trimmed my spy puts yet.
ES looking weaker.
Yeah. Alright, I'm going to close this ES and just lock this in. That was $500 profit on ES.
Solid.
Just still sitting in these spot puts with no trims just yet. Ah.
Still trying to take NQ higher. Struggling on.
Yeah, that NVIDIA move is giving a little bit of divergence here between SPY and Qs. Qs is holding up while SPY and ES are pulling back.
NQ, higher high out of this little range. See if it really gets going to a high day again. Not giving it up yet. Really just shot straight up this morning.
Oh yeah.
Gosh. Not giving it the chance to come in, really. We got lunch in 50 minutes. Still got a little time till lunch.
MES short, 10-minute CBC risk.
Oh, Mabel's gonna make me get back in now. Come on. I'm sure.
I'm sure.
Yeah, I wonder if this is a orb liquidity sweep. Break out of the range, CBC flip back into it. Typically, we at least see mid orb, which is like 602. But not sizing crazy on this. I've had one loss today, many other wins. So I'm just taking it easy.
Yeah.
I'll be the last one.
I mean, IWM, RTY, the Dow YM look terrible. ES does not look that good, but semis are just ripping us.
Yeah, semis are ripping.
They're taking it. Super try and break these highs on NQ. ES again is looking a lot rougher. This area. There's NQ. New high. ES lagging.
Yeah, stop that breaking down the bounce. Yeah, that's my concern. Is like you got to be, they don't have this like there's a divergence here. CBC is short on ES, but it's not on NQ. NQ's breaking highs. So we'll see. I'm only down like 2 points here.
It's 22,000 on the old contract right there.
Yeah, that's still valid.
I am up almost 50% on my NVIDIA equity.
Bang. Let's go, baby.
April dip that I bought on it.
Hell yeah.
Let's go.
Not yet taking those highs on ES. We're a ways from it. Above this, I mean, I don't have a whole lot on the higher time frame until previous week high. I was thinking we would move to the low first with the way we were looking this morning, but we're a lot closer to the high now, so. NQ trying for another high. There it is. ES still lagging behind. I'll be right back. All right. Here's our outsized move from that consolidation. What's this next gap I have? Oh. Four-hour candle range seems much smaller than the average. 77 points so far. VIX back under 19. Bye-bye volatility. Poor thing, man. Hopefully that gets perked out during FOMC, as Knots would call it. You got your FOMC thread coming out this week?
Fom Dizzle. Yeah.
Let's go, baby.
Fom Dizzle.
Yes, sir. Yes, it's lagging a lot.
I'm all spreaded it up right now.
Oh, there we go.
Gonna make me a nice 800 bill.
You're never taking care of at Amazon now. Amazon, what's she doing? Rip. 216. Ah, damn. Let's go Amazon. Hey, Coinbase. Up 4.6%. Very nice. That was a big gap up.
Trump's about to speak.
Oh, is he? Well, thanks for that. Thanks for the clarification.
Someone just sent me a YouTube link. President Trump participates in a bilateral meeting with the Prime Minister of Canada. What time does that start?
Oh, boy. Oh, boy. huge is still looking strong. Wow.
Yeah, it's holding up.
Yeah. Good leg. Damn.
Hasn't broken out yet, like truly, but it's holding up. It's getting ready to do so.
Oh my god, Amazon.
Yeah, Amazon is moving.
My AZU shares are 40%.
Hmm.
When's Hefe gonna start selling again? That's the question.
Efe.
My name is Jeff.
My name's Jim. My name's Jim.
Alright. I'm going to close my SPY put that entry. We were still below where I entered in it, but this is what Theta Burn does when price action takes too long. So I'm about to close and just sit back and relax. What kind of fucking candle was that? I swear that candle was just green.
Right.
On SPY. It literally just went back to the zone. And it just flashed red real quick. Am I green? Oh, now I'm green by $2.
He's rich.
I'm rich, bitch. Oh. Okay. Well, they're just testing my patience here? What are we doing? They heard you say you were about to close and then, oh, I tricked them. Ha!
Got him.
Market maker. You thought I was gonna. You thought wrong.
Got
You thought
him.
wrong. You're like, oh, Casey's about to close. Dump it. Here we go. Oh.
Iran is ready to deliver major blow to Israel.
Oh.
That's when they suck you in. Not me though.
It's about to hit my freaking. Oh, I'm gonna have to trim it. It's only back to where it was really where it could trim it because of Theta. I'm gonna do a safety on these contracts. We're about to hit the 21. I have no choice. Oh, they almost got me. Yeah. What's that video amp? They had me in the first half.
They had me in the first half, not a lot. They didn't get me though.
Right. Come on.
Right.
Here we go. Here we go. This is what we want to see. This is the spot. We're almost there.
All right, now it's starting to look like a liquidity sweep off of the orb. CBC still holding short here. I got mid orb on SPY at 602, but first target should be VWAP 602.81.
Get that move back down to that 143.50. 10 o'clock lows.
That Iran is just now hitting the wires.
Oof. Tesla's the number one seller of new cars priced over 200,000 yen China. Ooh. Nice. Slap and a half. The Bulls reclaim it. The Bears start to take over a little bit here. We still have that divergence between NQ and ES. ES still looking a lot weaker. And you're short, right?
He is.
Yeah.
If you watch my live stream, you would know that.
Oh, that's good.
But it's been like break even still.
Yeah.
Should have shorted RTY and IWM at the high instead of
Yeah.
use.
The Dow and small caps both like rolled over.
Okay, Q's just bounced 40 cents.
Trying to hold on to this 190. Come on now, lose it a little.
Yeah, trying to bring back name.
Try. Question is, how far do they take it? So I got plenty of spots. I just don't know where they want to let it stop. Previous hourly gap right at 143.50.
AMD still going new highs.
Jeez.
No fucks. Given.
Wow, that chart this morning is crazy. Straight up. Wow.
Yeah, literally no fucks.
Just for $10.
Not going new highs, it just bounced the dollar, sorry.
That's a crazy chart this morning, damn. Wow. Yeah, we were waiting for that. Big dog, Mr. T. Let's see what kind of craziness he brings here.
Alright, spot just underneath the 21 right here. Looking for this spot to break and give a quick flash down. This was target for me to start trimming was 603.20 on the spot. It just took forever to get here, but I am green on these contracts. I did take a small trim. Could have held that ES short a little bit longer, I suppose, but getting a little dicey there for us.
Oh, goody. We did have that outsized move to the upside. It probably stopped a lot of people out, scared a lot of people there.
Look at Apple. Yucky.
Roll it over. Oh, she's rolling. Oh.
Yeah, she is.
Microsoft's at highs, but not really looking like it has a whole lot of momentum to keep it going. See if that changes. NQ's still trying to hold on to this range low. ES already took it.
I know. Microsoft is looking like it just
AMD going for highs.
Intraday flag. AMD is about to make a new high. Nvidia is consolidating over 145.
Yeah.
It's still very, very strong. Definitely Q's a lot stronger than SPY. WM the weakest, but to do what to do.
Throwing Russia out of the G7 was a mistake, Trump. Oh, God.
Whoa. It's getting fast. ES has slight equal lows at that 93.25. That's where you might expect a bounce. Really, that 6,090 is where I look for any sort of bounce. If we get dumping a bit here. She holding on. She's trying. Very choppy range up here. We're not even in lunch yet either. 20 minutes. Be in lunch. We also do have 50% retracement of that last 4-hour candle. We were on a pretty good trend to the upside. So if we do want to sell a bit, like to see half back of that. That's 67.50, 22,000. Depending on your whatever contracts you're looking at, though, it might be different. So make sure if you're looking for that level, mark it yourself. And Q is still holding on. We're in a very, very tight range here, though.
Yeah.
Be careful, guys. I know it's not lunch yet, but it's starting to feel like it here.
Above orb, above 21, above volume point of control. I mean, if something comes out, this can drop hard.
Yeah.
Like, it's just dangling here.
It's definitely an interesting look this week. I'm curious on which we hit first. I mean, now I'm starting to think we hit previous week highs first. Unless I don't usually expect this, but depending on how the week goes, you can always get an inside day, of course, but I would not be expecting that this week.
Yeah.
So that's where we can bump down the lower time frame, and we know, okay, previous week high or previous week low needs to get taken. We know that, but now we need to drop down lower time frame and try and figure out where this thing's going. I initially thought downside this morning, but the market told me completely different. No, we just got ripping into some big spots. Now, though, I would like to see a bit of an intraday dip. What's up, Ben? Sorry?
Trump is done.
Oh, he's done?
That's quick.
That was quick. It was not as expected. I thought it was going to be a little crazier. Oh, this 190 is relentless. Look at their data we got this week. It's mainly just Fed unemployment claims Wednesday morning. Tomorrow we got retail sales. 8:30 a.m. Eastern, so that'll be good. See what we get there. They're gonna hold it off till lunch to do anything with this thing. Interesting. It's always kind of an interesting trading day, the first day of the new contracts. I've noticed. Do you notice that? Do you think things are kind of always a little weird?
For what?
Or do you not really see a difference in it? I'm talking about like when the new contracts come around. I feel like the first day is always a little freaking just hairy with prices.
Yeah, Friday. Well, the first day on Friday will be weird.
Yeah.
But you have to think the actual people that are trading this, like not like intraday traders, but actual like position, like actual size, they're closing out on one and rolling to the next one. So like exactly, you'll see the contracts move differently right now, and a lot of people will forget about. You have to be able to look at both. So like that high.
Agreed. I've been flipping back and forth because
the high was exactly at 22K on the current contract.
Yeah, I see that.
It's just much easier, like if you just look at the underlying and the levels that you have there: NDX, SPX, GQQ, SPY. If you look at like SPX 6050, the exact high today. Try to tweet it out, be like, this level is still valid.
Facts. Yeah, it's not just completely invalidated. Because even if it's a different level, it's still like same general area when you look at the contracts. You know what I mean? Might say a different level, but side by side, if you have the charts, you're still trading in the same.
There's a lot of weird stuff going on. I mean, semis are absolutely ripping. Everything else is just kind of holding in.
Yeah, we're doing nothing here on MQ. Just hang on.
It's consolidating. I mean, it still looks fine if you're long.
Mm-hmm.
I don't see how you buy like long here.
No, yeah, I can't do it.
It's like a lot of the risk on names are getting chased again. Like the freaking nuclear names are running, the quantum computing names are running long ago. You know, your dumbass names like Hems are running.
You're a dumbass.
I knew he was just in it. I knew that was coming in there.
Throw that way in just for nuts.
Yo, pleasure making money with you guys today. Have a great rest of your Monday. Catch you tomorrow.
See you later, babes.
Take it easy, brother. Later, man. Yesterday morning, I woke up and Bassmaster was on like Fox or something. I was sitting there watching these guys fish. I was like, why is Maple not in this?
Why is Maple not?
Dude, I swear, these guys are out there like they like drive that like trolling motor up front with their foot. It's insane. And this like foot pad thing that they like put one foot on, and that's how they
it's their trolling motor.
They drive their trolling motor without. So that's what we need AI to take care of.
It is so much fun. All peaceful out on the lake. You just got your trolling motor. You're just going around the cove. You're ripping the buzz bait, top water. Early in the morning, you're just slow rolling that thing, and then oh, Big Mama smacks it with her legs, just out the water.
Big Mama smacks it with her lips.
I'm like, oh shit.
Big Mama.
Bro, there's nothing better than like getting so caught off guard when, especially top water, you're just running a little top water. Like, I love a buzz bait. Just run that. Oh. And out of nowhere, you're just chilling, and boom. They hit that thing so hard.
As long as it's Big Mama hitting it.
On there, so you never miss them. Oh, you're golden. Biggest fish I ever caught was off a drop shot. A little drop shot. Purple worm. The simplest way.
Sirens are going off in the Middle East again.
Jeez.
Market doesn't care. Let's buy quantum computer names.
Yeah. Seriously, the market just doesn't care. So interesting.
Gold
I
down
was
a
pretty care a
percent.
little when
Bitcoin
we were getting
ripping.
those strikes on, what was it, Friday?
Yeah, it's the initial scare is always the big scare, right? And then it's like
And then they don't care. Unless it gets bad.
It's because smart money is gonna wait and buy on a dip, and it's not gonna buy at the highs.
Exactly.
Smart money said that 2% looked good enough to me.
Yeah, 2% dip was how big of a dip was it?
I think it was just about 2%.
2.8 on futures on NQ. Yes, it was 2.4.
They said, they good.
Come on,
Just trying.
pull the plug. I'm not even looking for like that big of a dip, like 40, 50 points. 65 or so if I get real frothy here. Real frothy. This is previous day high. I mean, too much to ask for. A 0 day 533s may print. I was waiting on Knox to tell me he bought QQ Cuplets.
What?
Oh, waiting on you to tell me you got QQ Cuplets.
I sold QQQ puts. Is that good enough?
I bought some from you.
And let her go. They really let her go here. 4-hour candle can flip red at look at the normal chart. Flip red at 928 amp.
Still in my SPY puts, looking for a VWAP. I'll put the chart at the top of spaces for that trade on ES short in these SPY puts. But I do have a stop in just underneath my entry price. If it hits, it's a small win for almost nothing really, just little profits. I'm going to secure every trade, but I'm going to look for more. I want to see this level right here break and go flush down to VWAP, get another trim. So be my small win. Huge explosion occurred around Mehrabad Airport in Iran.
Oh boy. is not good. Well, here they go. Trying to take these lows on NQ, these range lows. Let's see if they can get through them.
Come on.
Run.
What we doing? What are we doing? Oh, yeah, that's right. I'm showing cues.
You're funny.
I'll be right back for this top of the hour.
Heard that. Sounds good. Yeah, we got lunch coming into play. Since it's lunchtime, we're gonna have a little combo with our friend Mike Venuto over at Fire ETFs as well for the next hour. Usually slow during lunch, so we take advantage of that time. Have some fun conversations. Let's see if NQ makes it slow before we roll into that. She's trying. Oh, there it is. Boom. Whoa.
Trimming.
Hello.
Iran is
Look at
preparing for the most largest and most intense missile attack
Would you look at that?
in history on Israel soil. No bueno.
Wow. They're trying to buy it up, it looks like. Initially. That was fast.
Yep,
Where's
already
M?
hit on VWAP there, so I took trim.
M better get here quick so you can trim. He might have had resting orders though. Hopefully. That was very fast that happened. Wow.
Yeah, I was right in that little headline.
Coming right into lunch too. Wow. See if they buy this thing up. Em, you better hurry. I hope he had resting orders. Oh gosh. He stepped away right before this thing went blah.
True.
Hurry back, Em.
Let's go to get a Modelo Negra.
Facts.
That boy loves them.
Love 'em. Can they take her lower than that, or is that the spot?
Holding her up.
I'm trying there. I would like to see it drop more, potentially try and flip this 4-hour candle red, but ES is holding a big spot. Unless he can get rugging some more. Don't be shy, put some more. Well, not a bad bounce, but a little on the weak side in my opinion. But it could pick up. Could pick up real quick. on the Fire ETS account?
Yes, sir.
How we doing, my man?
I'm exhausted.
Yeah. Me as well. I've been doing a lot of traveling. But we're back at home. So.
Yeah, I had 12 hours of travel yesterday.
Oh boy. Yeah, it's definitely worse than mine. I thought I was bad. I had about like 8 hours or so. 12 hours is definitely worse. You beat me.
12 hours and you lose the 3. That sucks. You know, when you come west to east.
Oh, agreed.
It just I got to bed at 2 a.m. and this is my 5th meeting this morning already. So.
Oh gosh. Yeah, I know. I was a little luckier in that area coming back to the West Coast. I'm able to gain those few hours, but I lose them in the morning. You know what I mean? Waking up early, so little bit of a trade-off there. But we're excited to roll into the combo coming into lunch here. Usually a slow time for the market, so we're gonna switch up the combo here. But yeah, Mike, how are you doing? I haven't really kept an eye lately on the past week. I've just been so busy on some of the Fire ETFs. But you wanna dive into how they've been doing a little bit and some strategies you may have been seeing people using?
Yeah, so today we're going to bring up a couple special guests. I see one is here already, and Weisstock, if you could ping Grizzle and just make sure they jump on too. But so, the performance is here, by the way. Oh, Promise is here? I understand. Oh, yeah, there he is. Okay, gotcha.
I just brought him up. Should be up here now, yeah.
Cool. All right, so, we've had some really good performance through all the strange sidewaysness, the volatility, right? Everything's been going well. I put it up in the nest, just for anyone interested in learning more about the fire funds, it's there. We've been doing these spaces primarily for a couple reasons, right? Number one, we want people to engage with us about the fire movement. We truly believe in this idea of financial independence. The retire early, I care less about now. I don't think anybody really retires. You just get to do the freedom of, doing the things you like to do. That's what retirement means for our generation. We're not the boomers that kill ourselves till 70 and then, get 5 good years and then complain about Medicare. Right? I want people to find their way to financial independence so that they can make money trading or make money from passive income or make money running an Airbnb or doing art or that's the whole idea. And so Tidal created 2 ETFs to help with that, one for saving, one for building. And the other reason Tidal created these ETFs is we primarily put our clients' ETFs in these, right? These are fund to funds ETFs, meaning they're ETFs that hold other ETFs. Tidal doesn't charge a fee for this. This is something we do to support the fire movement and to support our clients. Totally transparent with everything. My personal net worth is mostly in these funds, about 70%. Outside of my ownership of the business that's not liquid. And I put all my accounts at public and at Blossom so people can see that I'm actually buying what I say I'm going to buy. And on the fire website, you can see what we own. So that's kind of the big picture. Over the last few months, we've talked a lot about the fire movement, what it means. We've brought on people to talk about retirement strategies and asset allocation and all those fun things. And then the last couple of weeks, we kind of pivoted to bring on some of the portfolio managers that are in the portfolio and talk about why we own them and have them explain to the audience the things that they're doing. So today we brought 2. So brought Thomas from Grizzle. He has DARP, DARP, which is Disruption at a Reasonable Price. It's a growth ETF that's basically trying to do very much what ARK does, but they actually look at price and not just buy themes. And he'll be up here to talk about his things and what he's doing. It's a big part of the growth portion of our FIRS portfolio. That's our diversified savings or wealth building portfolio. And then the second client that we brought up is Peerless. They are not in the portfolio, and they are not because even though I want them to be, they are structured as a fund of funds, and a fund of funds can't buy another fund of funds, but they're the type of satellite position that I recommend people own, and I personally own, that you can see on Blossom and Public as a complement to the fire portfolios. And I've had in the yield max spaces and in the fire spaces, a lot of people ask about wheel strategies, option strategies using a wheel. So we thought it'd be great to introduce them as a satellite position to our core holdings. And it wouldn't be a satellite if it was not a regulatory thing that requires us to not hold a fund of funds and a fund of funds. So, said a lot and just get that table set. And I think I'd like to start with Scott and Thomas just to introduce themselves, their business. They do a lot with media and hard money and all that, and talk about DARP, because I already kind of explained why I use it. Right, that's the growthy portion that counterbalances the value in my equity portfolio. But Thomas or Scott, you guys want to go first?
Thanks a lot for the kind intro, and Wolf, always great to join you on here. And thanks for everyone. It's with respect to the fire ETFs, this is definitely a very novel, way to package it up and really back the movement. And we're thrilled to be a part of that wheel. And with respect to DARP. So it's a Grizzle Growth ETF. Ticker is DARP. Disruption at a reasonable price. And I think that at a reasonable price is the key point here. Our differentiator relative to others in the disruptive space is critically we are at a reasonable price, not at any price. And I think that's that's a key differentiator. We're believers that disruption is real, and we're witnessing it right now with AI, and it's around us. But there's a huge differentiator with respect to outcomes when you really have a valuation overlay. And I think that's how we think about it. We think that something trading on 200 times price to sales or PE, right? Like, your margin of safety is limited when you say buy things for 30 or 40 times PE, and that's we're happy to make that bet every time, and we do that within the portfolio. And we've done quantitative studies. We have a white paper that'll be forthcoming and will be available on the site. But I think it's a critical way to think about how you can still get exposure to disruptive themes, but have a downside protection. And that's really what valuation gives you. Every time we've seen a bear market in disruptive stocks, and primarily the bear market has been driven by it's been a valuation orientated bear market. So you always get that protective feature. And I think the biggest example of that that we've seen has been in 2022, where there was a massive bear market. I think ARK was down over 70%. The DARP ETF, conversely, was down 19%. We were in line with the S&P 500. Now, there's a couple reasons. There's the valuation, the buffer that we get with the ETF, but secondarily, we also have a nuanced view about just the full value chain of disruption. We think that there's a component that's really important that is getting underlooked across the board, which is the resources or commodities that flow into disruption. So think uranium, think battery metals, think natural gas, even to fuel all this AI. But I'll leave it there. I'm not sure if Scott's up here as well. He could add. I'm not sure if I see him as a speaker, but just hopefully that gives a good overview of what we do.
Yeah, I think Tom covered most of the key points. I mean, the key thing is, we're looking for growth stocks. So there's definitely, revenue growth is an important part for us. We're just not willing to pay any price for that growth. And secondarily, we also look for cash flow inflection. So that's just showing that this is a profitable business. Because as we've seen through COVID, lots of exciting companies popped out of nowhere. They were growing at exceedingly high rates. But when it came down to it, they had to make money and they couldn't keep borrowing in 2022, for example. The ones that had great products, where you saw that, okay, they're going to see a cash flow inflection. People are willing to continue to pay for this, even if the price goes up. They were the winners. And if you would own those high-flying guys, they might have worked for a bit, but then they had a really big sell-off. And so looking through a cycle and growth, if you look for that cash flow inflection potential and not the most expensive stocks, but you're still willing to pay for good companies that are growing fast, that's served us well, and that's what we're going to continue to try to do.
Awesome.
Can I chime in on that, Mike?
Yeah, but let me just go first, and then we'll come back to you, and then we'll go over the wheel, guys. This is a stock room, right? Like everybody loves stocks, and they're talking about trading all day, and we're happy to come in and sponsor the noon for this audience. So just would love to hear about some of your favorite picks right now, like some of the top 10 holdings or things that you're really excited about.
I'll let Scott weigh in.
Yeah, so I mean, number one, if you look at our holdings, we have NVIDIA up there, a big weight. That's just a key one for us. As you look at disruption, the largest theme really is AI, and everyone knows about NVIDIA. What the bet we're making and everything we're seeing says that this is going to continue to play out. Is they're just going to be a key critical part of supplying chips longer than people think. So there's certain growth priced into the stock. We think that they've already shown that they could grow faster than people think for longer than people think and continue to keep up their margins. So we think just that's kind of the core of the whole AI theme. You need to have a big weight. Also, the stock has it's been very good the last month or so, but it took a breather from last July's high. So we think the valuation is very reasonable for the growth. So we continue to really like NVIDIA. And then there's another theme that we kind of have a higher weight to, which is just all of the energy plays that are going to go into supporting AI. So something like a GE Vernova that makes natural gas turbines. We're just big believers that everyone talks about, solar and wind and batteries will be the next wave of energy. But we think in the medium term, what actually will happen is that a lot of new natural gas plants will be built to support AI and the growth of energy and everything going on with LNG and LNG exports in the U.S. So we just think that the market hasn't fully appreciated that yet, where when we look under the surface of the actual data, there's massive demand for natural gas power plants and for natural gas to export, but the stocks don't reflect that because everyone is still talking about the technology heavy aspects of energy. So we think that's kind of a medium term, like a 2 to 4 year play that we're pretty excited about, is like the GE Vernovas, the Vertivs, which are the cooling, and they do a lot of energy heat management for all of those data centers. So that's an interesting one. And then there's other ones like, so we like to do barbells. A perfect example is Vertiv is a little bit more expensive, higher growing part of that, the heat energy management. And then there's a Trade Technologies. Company's been around a little bit longer, but it's a much more reasonable valuation and it is less volatile. So we like to put together the high flying one that's at an okay valuation with one that people may think is a bit boring, but it's benefiting from the exact same trends going on, and the valuation is just really, really reasonable. So we're big players in AI. I mean, overall, I think the portfolio is about 60% AI, and then we go between 10 to 30% of that commodity bucket. Basic at a very basic level, you can't have NVIDIA chips without the copper that goes into them. That's kind of how we think about commodities. And luckily for us, a lot of these technology growth funds, they wouldn't touch commodities with a 10-foot pole. So we think there's been underinvestment across the commodity space, and everything going on with AI is just going to supercharge commodity demand in the right commodities. So that's been a big opportunity for us, and that's allowed us to outperform. So I think those are some of the names in our top 10 that we like the best.
All right, before Dan, sorry, I got to follow up because I just spent 4 days in Moab, and I learned so much about uranium. I got to actually meet the mayor of Moab and spend about an hour with her, and she's talking about how they're cleaning it up. And I'm just thinking, Dan, I didn't get to tell you about this, but I was like, I wish there was a way they could clean it up to do what Stronghold does with the coal cleanup. But there's also a resurgence of some uranium mining there in Moab.
Well, Mike, it's very interesting that you say Moab. I was in Moab last year. And one of the major uranium stock we own in the DARP ETF is Anfield Energy. So we're very open to playing across the spectrum. I'm not sure. Wasn't Moab? I'm not sure how much you traveled through Moab, but was that an incredibly gorgeous area like that? It's just the whole area was stunning. And we, Anfield Energy, just got a DOI approval, so basically environmental approval in a record 10 days, which something that normally would take an environmental approval of over a year. And this is part of Trump's basically energy emergency. We need to put everything on this. We can't have the same playbook that the stifling playbook of regulatory, just molasses, if you will. And basically, Anfield Energy was the first out the gate with their project that basically it accelerates the timelines of these. And so it's a very exciting time to be invested in uranium, and the stocks are actually all flying today as well. But again, for us, it's a valuation where we see opportunity. We see projects. Anfield is one of 3 companies in America that have permitted and constructed uranium processing mills, which we view as a strategic advantage. But it's real. The change is happening, and we can really point to this administration as being a huge catalyst for that specifically.
Yeah, so I just put some pictures in the chat or in the nest there. I got my yield. I got my other funds in there. So I got Yield Max hat on, and Linda, my wife's got her shareholder yield from Cambria on. But it was amazing because this is a local mayor, and she spends most of her time in D.C. trying to get, lobbying for the resurgence of uranium. I know that's been a big part of your guys' portfolios from time to time. I learned so much about the history of it and how, the cleanup of it, as well as the resurgence of doing it the right way this time. It just seems like amazing growth. And there's just this town of 5,000 people ready to do it all and just do it quick. It was exciting.
Yeah, this is the time that I spent there, it's just incredible, the community support to want to get this going again, right? And we just finished a critical minerals roundtable and our hard money conference. So we have these 2 big conferences. We just finished them. If you go on our Grizzle Media, you can find them. But specifically to this, it's been phenomenal. The change with respect to communities that now know supply security is critical, and there's no more critical supply than uranium, right? It comes from Russia, it's like in Kazakhstan. These are challenges that America needs to address, and there's no better way than activating historic uranium hubs of production in America.
And what I would mention is the main thing holding back uranium historically has been regulation. So if the Trump administration is serious about breaking down the regulation barriers and approving things, in 2 weeks instead of a year, that will make the biggest difference actually, because we already know the potential of uranium. We rely on it for a lot of our energy in the U.S. Fully understood. It's just the permitting has made the costs less attractive versus solar and on all that stuff. So there could be a big difference, and that would be big for demand for companies like Anfield, the ones who are providing the uranium in the U.S. So that's a trend we're playing.
Awesome. Hey, Weisskopf, sorry I went down a rabbit hole, but I wanted to share because it was just so inspiring.
You just wanted to make me fucking jealous. I mean, listen to this. For sure. I want to circle back on my questions and actually give the guys from Peerless a little bit of time. And then I've got a whole bunch of questions to share with the group in regards to DARP, but I just want to balance things out. It's all right, man.
No apologies. Go ahead. Ask the questions. Let's go. You want to introduce Peerless first and get them up here?
Yeah. Robert, do you want to go first?
Doesn't matter, me or Eric.
Yeah, go for it. Go for it. In case of Peerless, for those who don't know about the wheel strategy, just give an overview of that just in case somebody doesn't. Because I think at the end of the day, one of the things that I really like about DARP is the discipline. You guys are absolutely focused on your own discipline. I think that's something frequently lost in the way of investing. You got to know your journey. You got to know your discipline. So bet.
Yeah, no, I appreciate it. And I know Eric's prepared some comments as well, so I'm going to let him roll with it. But I just wanted to say I appreciate the Fire guys for recognizing that we are a component of this. You guys are picking some great names. It's exciting to see this forefront of innovation and that styling and being on top of that stuff. We're kind of, I guess, almost the polar opposite of that, right? We're the boring, mundane, gonna be the high income, steady, not necessarily growth focused, but that income component of I want to do what I want to do at X years old, and I want to rely on this type of income, and our type of strategies can be utilized in that type of portfolio. So we appreciate the nod there, and I know Eric wants to kind of dive into some of the specifics.
Go for Eric. Eric, you're muted, my friend.
I don't know if Oh, there he is. Yeah, he's just muted. He should be in the bottom left. There we go.
I'm on now.
There we go, Eric.
Sorry, I don't use X very much, but anyway, thanks a lot for teeing me up. Rob's absolutely right. We are almost at the other end of the spectrum in terms of investment strategy. We're seeking income regardless of market. We don't need share prices to go up. And so what we are is really that part of the portfolio that you're kind of protecting against maybe a range-bound market or, God forbid, a lost decade. But we pair really well with something like a DARP. I was just looking at it because it's a very growthy fund, and I do like the valuation, consideration there. I just turned 50, and I got my Series 7 license in 1999, and I didn't know it at the time, but that was the beginning of what we call a lost decade in the financial markets. And it's a period of time, a 10-year period of time, where the S&P 500 does a whopping zero. And there haven't been too many of them, but the few of them that existed, the first one, was 99 to 09. And if you think about back to 99, that was this dot-com bubble. And it was about the only other time that PE ratios on the S&P 500, they got to like 26, 27 times earnings. And lo and behold, we got a pretty crappy 10-year number after that. So starting valuations, they're not a very good predictor of the next 6 months or 12 months. There's too many other factors, so I wouldn't rely on valuations. But they're a pretty darn good predictor for the next 5 or 10 years of an asset class's performance. And right now, we're not exactly low valuations in terms of now I know it's a stock picker's market, and there's certain areas that are cheap. And there's a lot of growth out there too, which I like about something like DARP. But on average, PE ratios are pretty high, 23, 24 times earnings. And what we do is we write cash secured puts, and we write them out of the money, which, if you've ever heard of a buffer ETF or a buffer strategy, it gives you a buffer against initial loss. And we do them weekly, which is a lot of work for Rob and I, but the math, we are convinced, works out better. So we're protected on the first little chunk of drops because we're writing these puts out of the money, we're collecting income. I'm not going to go into options 101 because it would take too long. But we're writing a cash secured, which means that they're not naked. It's a conservative income strategy. We're protected on the first chunk of loss. Then really the essence of the wheel is if we get assigned a name, and we do these all on broad-based and sector ETFs, so I'll explain that in a minute. But if we get assigned a name, we're not mad because we get to buy it cheaper. We're never buying at the high. We always get a discount. And then what we do, again, the essence of the wheel is then we hold it and we write a call on it. So that becomes a covered call position. And our rule of thumb is we want this ticker to get back to where we got it assigned. In order, that's usually where we set the strike price, the call strike price. And sometimes that happens the very next week. This week, we'll probably get some of that. Sometimes it goes down more before it comes back. But Rob and I are convinced the problem with a lot of covered call strategies is they continue to write at or very close to the money calls constantly, even in a bear market. And so what happens is you get the rebound, which we just experienced over the last month, and a lot of these covered call funds get called away way too early. So you get, unfortunately, you get all the downside with a covered call fund. But then you don't get the rebound because you get called away. And there's risk in that of kind of a long-term declining NAV. And the way we protect against that is first, you don't get all the downside because we're writing the puts out of the money. We add put writing to the equation, which not a lot of funds do. On average, you get more income in puts than you do calls for the same ticker, same strike, same expiry. The reason you do is because of behavioral finance. And this is something I have, I own a wealth management firm, so I counsel clients every day, and there's a lot of behavior in this. People pay more for protection than they pay to speculate on the upside. So people pay more for puts, because if you buy a put, you're protecting on the downside. They pay more for those, all else equal, than they pay for the call, the same call, to speculate on the upside. The reason why is because the pain of loss is twice the satisfaction of gain. At least that's a phrase that I have heard and I think is pretty true. So we capitalize on that by selling the puts, and we're able to get a buffer on the initial loss. We get income there. That income annualizes to usually the mid-teens. And the reason we don't do individual stocks is because we get assigned a name, we have all the downside. So we're kind of capped on the upside, but we have all the downside. Because of that, we have to be hypersensitive on the downside, not getting clobbered. And one way to do that is avoid individual stocks and stick to broad-based and sector ETFs. And we diversify fully. This is another big problem, I think, in the covered call space is, if you put together a long port, if I put together just a regular, let's say it's a 40-year-old client and they have 20 years to save and they roll over 401k and they're aggressive, and I'm not going to use bonds. I'm going to asset allocate various equities, large cap, small cap, international real estate. If you are owning an option income fund, why wouldn't you also diversify among all those same areas? Because your underlyings are very important, and we fully do that, right? So we don't do it on SPY because we don't think there's enough option premium there. It's almost too diversified, but we do it on Qs, IWMs, and then we kind of break SPY out into its various sectors. But we slightly overweight some of these areas like energy, GDX, which are gold miners, and then interestingly KWEB, which is Chinese internet. And the reason those three areas by themselves are actually pretty aggressive, and they'd scare me if that's all I owned. But the option premiums are good, number one. And number two, and probably more important, they have very low correlation to the S&P. GDX, as you might expect, is almost inverse correlation recently. KWEB is extremely non-correlated to the S&P. Energy, just recently, we've seen a little bump in there. They tend to be a nice little hedge against Mideast conflict. And we slightly overweight those because of those reasons, because you don't want everything kind of getting assigned at the same time. And we're just in it for the income. We came out at $20 a share a little over a year ago. We're just about 20. We're 1975 today. We pay about a 12% dividend. There are higher yielding strategies, but I think most people on this call know that sometimes, if you just focus on yield, you can get burned. The too good to be true numbers, and we feel like we're in that sweet spot between getting a fair return if equities don't do anything. If we get a lost decade, interestingly, from '99 to '09, while the S&P didn't do anything, small cap value did pretty well, REITs did pretty well, and option income strategies did pretty well. Option income, it makes sense. We're getting yield. We don't need markets to go up. Small value and REITs were actually undervalued in 99. And those areas did pretty well too. So regarding the FIRE movement, I had really not heard that term, I don't think, until recently this year. And then interestingly, a client of mine that's early 30s, it's actually the daughter of a longtime client, brought up the term. And I think it's great because it's all about, living way under your means and saving a bunch. I will say this with respect to kind of behavior and emotions. I deal with a lot of people that transition from working and saving to retirement. And even if you get this huge sum of money by the time you're 35 or 40, and you're like, okay, I did it. Because I can attest to this because I have a version of this personally. I did it, but it's very, very emotionally difficult to go from over saving to not only not saving, but actually spending your savings. Even if it's only 4% a year, even if all the Monte Carlo simulations can tell you that you can do it, it's very emotionally satisfying to save. So I think the biggest advantage of kind of over saving at the beginning is obviously compounding. Then you get to a stage in your life where maybe when you're 40, you don't retire, but you don't have to save anymore. And you can spend your dividends, you can get a job that maybe is less stress. Because all your friends are going to be working at 40. What are you going to do, right? So just kind of keep that in mind when you kind of think about retiring early. So anyway, those are my thoughts.
Great stuff there, Eric. Mike, did you have any thoughts for Eric after that? Mike might be muted.
Okay.
Mike, you gotta unmute, brother.
I'll give a little update. Year to date, Wheel is up almost 6% dividend. So this is a good year for us because when we get some extra volatility, we're getting more premiums when we sell these puts and often the calls, and that's helped. That's helped our yield, and we're outperforming pretty much all the other categories year to date. Where we will lag is a short, fast bull market where you get 2-3 month period of time where things just go up because we're kind of more or less capped on our upside, depending on where we are on the wheel. And our premiums and T-bill interest may they might get to 18%, but we're gonna miss it on a real quick growth spurt. That's where you probably need something like a DART to participate in that. And for my wealth management clients, I usually don't recommend more than maybe 20% in like an option income program, depending on what it is. But I think it's really important to have a hedge against flat, range bound, and get a fair rate of return on it.
No, I second that. I think those are some great thoughts because we know this market can really get moving sideways at times. I mean, even right now with what we've seen over the past beginning of the year, we're kind of right back where we started things, right? Even though we've gotten a lot of volatility, which it's nice you see some of these names like FIRS just holding up really well when you get these volatility injections, and that's what you're susceptible to. You know what I mean? When you're invested in the normal markets there, and so. I know for a lot of people in the audience that maybe don't want to get caught in any of that, that might be older individuals as well. These are some great names that can be generating income and be like great assets to be using when the market's slow, and we're not finding many trades as intraday traders. Did you have more thoughts, Eric?
I'll give a couple more statistics. I'm not sure if it's official, but Rob did some work on this. I think our beta is somewhere between 0.7 and 0.75. So we're going to be moderately correlated to the S&P, but on a muted basis because of the fact that we're writing puts out of the money and we get quite a bit of income that helps offset things. And we pay a quarterly dividend. yeah, it's a great complement to a growth portfolio.
I agree. It looks like I gotta drop Mike and then bring him back. He's having some trouble getting back on, so we'll get him back on here. But Emp, I wanted to bring you in. I haven't heard you talk at all yet. I wanted to get your thoughts. I know you've been keeping an eye on these wealth builder ETFs and FIRI with myself and keeping an eye on them. Do you have any thoughts on the combo so far? Anything you want to add?
I'd love to just ask the volatility piece of things. Eric, I'd love to ask you first. The wheel strategy was put on our radar, gosh, almost a year ago. It seems like at this point, it's been, it's stayed on my watch list, something I've continued to monitor. What are your thoughts around the volatility? Do you think we're going to stay up here in this range, with a Trump administration and everything that's going on? Do you think, eventually post tariffs, maybe if this Middle East stuff calms down a little bit, do we see volatility come back down, or do you think it's here to stay for a little bit?
I mean, there's always going to be some crisis du jour going on. We last year for the vast majority of the year was probably the lowest volatility environment that I remember.
Any launches from
Iran? A long time, and we weren't getting a lot on our puts. It was kind of frustrating. And we were missing out some of the gains because we weren't as long as a typical fund. But yeah, I mean, we're at higher valuations. We try to look at it like high volatility means that usually when people say volatility, they mean downward volatility, and that if we're mostly in cash, I think right now. We're about 50 to 60% cash, meaning that about half the portfolio is at the top of the wheel, not long, but writing out of the money puts. And then if we get a correction, some of those will likely fill. So we just think, when we get drops, it's a little. It's kind of like, okay, we get assigned, and then usually we go down a little bit more, but then it always rebounds. And so we just do it very systematically. And we don't have a lot of predictions on where volatility. We've kind of tried to build this to withstand anything. Maybe Rob could add some things there.
Yeah, I kind of hate to say we don't care, because obviously we care, right? But the regime is built for certain targets. We target those, and it's kind of like we like to correlate it to a lot of day trading rooms and day traders in this room, right? You really have to keep the emotion out of things, and that's kind of the program we've built. Is we're collecting these premiums on a regimented basis. If something happens, we get some downside volatility. Like Eric says, we collect the asset that we wanted to collect anyways. We just collect it lower, and then we're in call writing mode. So it's over that. We're in our fourth year now of development and active trading on this. We've done a bunch of back testing and testing of how this looks, and I really think it helps with that emotional aspect and just grinding away at a solid income.
Yeah, those are some great thoughts. I think it's really beneficial, especially I know there's a lot of, like you're saying, there's majority of our audience is day traders, right? But we do have those times where things are just, there's not a whole lot of opportunity in the market, and assets like this are really, really beneficial.
I'll add one more thing.
What's that? Yeah.
The capital requirements that it takes to write puts are a lot higher than people think until they actually go and do the math. I'll give you an example. Right now, we have a position in the Qs, the triple Qs. They're $534 a share, and there are no partial option contracts. The minimum is 1. So, and 1 is on 100 shares. So if I want to write a cash secured put on the Qs, and I want to pick a 520 price, right, $14 out of the market, I need $52,000 in cash. Now we use T-bills to get more yield, but that's one position on one minimum option contract, which is not a diversified portfolio, by the way. So when you add IWM and when you kind of round out and put utilities and REITs and international, it takes several $100,000, in my opinion, to properly run a wheel portfolio. A big mistake I see a lot when people sort of try this individually. And by the way, that's a perfect environment for an ETF, right? You can buy our ETF, you can buy one share for $20, and there's huge economies of scale there. And not to mention we're doing weekly, which is a lot of work. But one of the problems I see when people kind of try the wheel is diversification matters a lot more with something like this than it does if you're just long 5 or 10 high quality names. And it's because I almost equate it to like a high yield bond fund manager. Imagine, these are bonds that are risky, right? Imagine if the bond fund manager just owned 3 bonds and one defaulted. The most they're getting is the yield, right? It might be 8 or 9, 10%, but that's the most they're getting. So if they have one default in a portfolio, it really hurts them because there's nothing on the other side that goes up 50% to offset because everything's just getting its yield. So you'll see these high yield bond fund managers, they'll own hundreds, if not thousands of issuers because a few defaults don't move the needle if you're diversified. And that's, I think, super important when you're writing puts and calls because of just the structure of your upside and downside.
100%. It's really good stuff. Evan, I know you're on stage as well. Did you have any thoughts for Eric or just about the conversation in general? Evan might be out. I know X is, oh, there he is. I know X has been glitchy. I didn't know if you were there or not. Oh, no.
Yeah, Mike just emailed us back saying that he was having some pretty serious problems and X was down for him. So
it's X is giving us issues this morning.
He said blame you on.
Back up on his personal. Mike, you there?
Yeah, I'm back, dude. I don't know what happened.
Yeah, X is I don't know, having some issues right now.
Yeah, Eric said went on the screen, ran, and then I tried to unmute to talk, and the unmute button wouldn't work, and then it just rubbed me out and said the space was gone. This is crazy.
We're still here. We are still here.
So here's what I wanted to bring up and chat about, which maybe I think is okay, right? So you've got 3 situations here. Mike and I are working together for years, and the other 2 teams have been working together for a while as well. I'm not quite sure exactly how long, but sometimes we don't agree, right? And I just wanted to present the question, like when we don't agree, Mike and I just keep pounding away at him, and eventually gets mad at me, but that's okay. He's still there, right? How do you guys, Eric and Rob or Scott and Tom, how do you resolve differences of opinion? Particularly, like with us, we're not running concentrated holdings, right? We're 2, 3, maybe 5% exposure. But when you've got a difference of opinion in a position that is, north of 5%, how do you resolve that? Who wants to go first with that cherry pick of a question?
Happy to chime in, and Scott can also add. But I think for us, we are concentrated. Our view is we are in a stock pickers market, particularly in disruptive stocks. Now we have a little cheat sheet form here is that valuation, right? So whenever Scott and I have any sort of like differentiating opinions, our anchor is valuations, and I think that always serves us well. And we can have differing opinions about growth around that valuation, but I think that really helps anchor us. And I think a lot of times, if we didn't have that, I think it'd be a lot more challenging. There'd be a lot more junk in the portfolio, and we'd be like, coin flipping stuff, right? And again, that's when we look at other portfolios, that's what we share is an opinion that we would never own these things, and that really does ground us in what we own. But yes, you are going to have differing opinions. But when you have valuation as an anchor, how far you're going to be tethered away from the right type of weighting, I think is not that far.
And I'd weigh in also and say, if there's a position, or if a potential position comes up that we just can't agree on, I say we generally don't own it, just because it's going to be like it's going to take our eye off the ball on everything else we're doing. If we keep going back and forth on like, why do we own this? And I disagree. Well, here's why we're owning it. And so luckily we've never really had that situation because we're so data driven. I mean, the data kind of is our North Star and helps us pick things. But I think we would probably say the opportunity cost is too high if there was something we just couldn't meet in the middle. And I was like, I have to own this or else, like there's gonna be problems with how we interact. I'd say that's probably not an important enough position to take it at that point. So I think valuations are North Star, and then we just avoid taking our eye off the ball with something that we both don't agree on.
This is Eric. Yeah, Rob and I tend to agree, I think, on the vast majority of things. But I'm really fortunate that if I bring something up that it's usually like, hey, what do you think about this? And I think it's like pretty good. And then Rob will be like, well, I don't know what you think about this. I'm like, no, I didn't think about that. So scratch that. And I think then it can go the other way too. Just this morning, because we do most of our option renewals on Monday mornings, and we've occasionally used the VIX. There's an ETF that tracks it, the VXX. And we use wheel as a verb. I said we've wheeled it, right? We've done the same optional relay strategy on the VIX as we do in maybe Qs, right? I mean, whatever. But I brought it up today because I thought it might be a good time to do it, and then kind of we talked about it, and Rob shared various data and thoughts, and we looked at premiums, and we're like, no, let's not do it. So I appreciate our back and forth that we have, even though it's mostly agreement.
And what about trimming positions? Do you always agree on when to trim a position, or is that like process driven? And then along those same lines, like if a CFO retires or leaves, is that like a trigger for you guys?
Well,
I guess that's the question.
Yeah, so I can weigh in on that. Ours is process driven. We already have a process in place for when you're adding or when you're trimming positions. So we call it the IRR band, internal rate of return. So we have an expectation, right? If you're buying a very very volatile, like high growing stock, maybe a small cap, you're going to need a higher return than say an NVIDIA to take on that risk. And we have a certain expectation of where the stock's going to go. So we say, okay, for this type of company and how volatile it is, I need an annual return of say 10%. And so, we all know that the market's not efficient. So sometimes stocks run too far and sometimes they sell off. And so if a stock that we really like does very, very well in a short period of time, maybe it hits that level where we say, well, from this price it's at now until our target price 4 years from now, that's say a 4% return. That's not enough for taking the risk. Then we'll trim, and vice versa if something sells off. So that's kind of, we take a view on a stock, and then we say what the internal rate of return is, and then we'll trim or add depending on how the stock moves.
And for both guys, for everybody rather, how much does everybody pay attention to analyst ratings? Do we care or do we not care?
Well, Rob and I don't, because we're not picking individual stocks.
Okay, but the sector space, you don't pay any.
Here's where on the sectors, we've remained very consistent. It's almost robotic, but what we've done is we've overweighted always since we've started the fund. Energy space, materials, we don't, there's a materials ETF, but we don't use it. We actually use GDX because we think it just has better option premium and it's not as much correlated to the S&P. Now, those, we may play around the edges, but we've stayed pretty close. And I would also say that our portfolio as a whole, like if you were our notional exposure, which is basically long.
No, but Eric, do you pay attention to analysts or don't you?
No.
Because I don't want to run out of time here. And Thomas,
Yeah, so I guess we're fortunate that we've gone through the grinder. Both Scott and I. So Scott was sell side at Credit Suisse on the energy side.
I was an analyst.
He was an analyst, and I was the portfolio manager that was calling Scott. So that's how we met, right? So I was at TD Asset Management. I was calling Scott, and the way it worked then was that basically whatever was published, but you kind of, your line was to the guy you liked and you knew his opinion was solid. And so I'd call Scott on energy names. We became good friends. He subsequently joined TD Asset Management, and he had a unique role to then see the credit side, which I highly recommend Scott's pathway for anyone who's looking at being getting into money management. Do the grind on the sell side, the research side, then see the other side of the balance sheet, understand credit, and then go to buy side. But just big picture, a lot has changed since Scott's time, my time, where basically where we sit right now, I would say is if you were to put into quadrants or quartiles the quality of analyst research, I can easily say we're in the bottom decile of a sell-side quality research. And this is that all feeds into analyst target price, et cetera. There's a whole host of reasons here, but the biggest opportunity, and this is why X is so powerful, and the opinions that are expressed on X, and I would say an adjunct to that is Substack and all the other mediums where independents are producing research, is what's taken away from one side is percolating on the other. So I would say that when we look back and we look at the world we're in right now, I would say that much more of our analysis, when we think about looking for research and tidbits, I would say X is a much bigger driver than the street. So in a bigger way, I think the advent, a lot of the new ETFs that are coming on the title platform, we're one of them, is that reflecting this new normal, which isn't this old a broker called XYZ, and he gave him an insight. Like, that world does not exist anymore. As just like in geopolitics, you're getting the first indicators here on X. That same world exists for investing relative to the street. My 2 cents. Scott, if you want to add to that, but I think that's the new reality.
Yeah, I'll just add on that, sentiment, it's a good indicator. We use it for sentiment because in the shorter term, sentiment drives how stocks move on earnings, if they beat or miss. So because we're an active fund, we're tactical, we still use it to see kind of what's priced in. But we're looking longer term, and so we're not worried too much about what's being said. But it does help us see in the shorter term, if you're trying to be tactical on things, where people are positioned or what they think is going to happen. You can say, well, I agree or I don't.
I love it. Mike, you've been quiet. You want me to keep going?
No, fire away. This is great. I mean, this is the whole purpose of the space. Talk about the fire and the movement, as well as the products that we're using to help people achieve those goals.
Yeah. So with that, I'd say everybody in the group has some gray hairs, some scars, etc. Right? And I'm looking at some exciting markets right now, disruptive or not, whether it's energy or whatever. Right? We're seeing an IPO market finally open up for the first time in, I don't know, maybe 5 years, maybe 10. And